But let's put the focus on individual earnings now. Sterlite Technologies has reported a strong set of second quarter numbers where the company has seen both profits and revenue rise by over 40%. To understand the factors behind the second quarter performance, we now connect with Sterlite Tech CFO, Mr. Anupam Jindal. Mr. Jindal, good to have you on the show. I was going through your headline numbers, and it seems to be a decent performance as far as the margin is also concerned. Your EBITDA margin reported is at around 23% versus 22% on a sequential basis, and the net income has exhibited a growth of around 10 odd crores in absolute terms. Can you take us through the key factors behind the reasonable buoyancy at the operating level?
Yeah, so Pranay, thanks. And the overall performance in the quarter has been hugely supported by the product business growth which we have seen in the last quarter. This has primarily come from the volume growth we saw in both the segment, one fiber and cable. The fiber, we achieved 30 million annual capacity run rate with 7.5 million kind of number delivered in the last quarter. And that along with cable, we saw a better utilization of the capacity. The capacity utilization went up to about 65 to 70% as against 40-45% in the last year. So I think these are the two major contributors resulting in revenue growth, and we do have operating margin improvement because of the better utilization of capacity. So that definitely helps in getting better margin. Number two, I would also say that the margin looks high, primarily because the GST is not included in the revenue. If you adjust for that, maybe the margin could have come to about 21.5 or 22%. So about 1% lower than what we have reported, but these are accounting standards which we need to follow. But yes, there is an absolute like-to-like basis also, there is an improvement in the EBITDA margin.
All right. Take us through how the performance in Europe and China has been, because in your release you mentioned that you've entered new geographies and strengthened your presence in Europe, China, and exports have grown at a clip of around 73% YOY and are contributing almost 51% of your total revenues. What's the kind of growth that you have, that you are likely to see in the second half? After this rapid up move on a year-on-year basis, do you think we'll moderate going into the next few quarters?
Yeah, so if you look at the overall fiber market globally, it has been growing significantly over the last 15-17 years at a CAGR of almost like 17%. And that has been supported by the evolution of technology happening in the telecom and data industry, and that is fueling the demand. Sterlite being a global company, we do get a good amount of export earnings. And China and Europe continue to be our major markets apart from other countries. We have mentioned that we have supplied fiber to more than 100 countries, and we continue to increase our footprints in new geographies, new customers. And within the existing geographies, we continue to either get new customers or increase our market share in the same customer where we are. And we believe that driven by the overall newer technology coming in, like 4G is still in implementation in various countries across the geography. Then we have 5G coming in a lot of advanced countries, FTTH, fiber to the home happening. The demand is likely to continue, and Sterlite being one of very few players globally having integrated capability will definitely continue to have that share, because we are having a very clear positioning with our customer segment, and we believe that going forward also we will be able to leverage on the position we have created for ourselves.
What's the outlook, sir, on the Bharatnet project? I mean, I understand from the first phase of it, you guys got around 800 crores worth of orders. How does the second phase look like? What's the kind of order accretion that you are looking to garner by way of Bharatnet phase 2?
So we are still awaiting a lot of clarity and how the Bharatnet will be rolled out. We don't have much of information as to how the Bharatnet program is going to roll out. And it's going to be one of our business segments subdivision. So I think the company is largely having product focus and service and software business, something which still contributes close to 20-25%. And Bharatnet also, when it happens, it will be a sub-part of that 20-25%. So I would say that Bharatnet, while it's a very ambitious program for the country and very, very important program, we'll have to see how it pans out over the next few quarters and what role Sterlite will be able to play apart from just supply the cable.
Right. You've been also looking to constantly reduce your debt, and I understand that your long-term debt to equity ratio target is around less than 1. I mean, what's the plan? What's the current level of outstanding debt, short-term as well as long-term? And by when do you think that you can attain a debt equity ratio target of less than 1, and what's the year-end target as well for FY18?
Yeah, so we have maintained this less than 1 target of debt to equity of less than 1. And so, in fact, you look at last year also we closed, that is March 17 also we closed just above 1. And Q1 we ended at 0.9. Today we are at 0.8. So we are in fact already less than 1, and we want to maintain that less than 1 kind of ratio, primarily because while we are reducing debt through continuous focus on cash generation from the business, we also have ambitious program to increase capacity of fiber from 30 million to 50 million, which is going to have about 1200 crore of capital outflow, and this capex need to be funded. So as we generate more cash, part of that cash will go towards utilization, towards capex payment over next 2.5 years. Balance money will be utilized to grow the business or reduce the debt. So I would say that our direction is very clear that we want to maintain debt to equity less than 1, and we are already below 1. And I won't say that absolute debt would continue to reduce or remain at the same level, but I would say that our debt to equity would remain less than 1. That will be our target and our attempts.
Your current optic fiber cable manufacturing capacity is at around 30 million fiber kilometer. You have a long-term plan of enhancing this to 50 million fiber kilometer. That seems to be on track, but that's a long-term aspiration by June 2019. I understand 30 million is already attained. What's the run rate by way of which you target achieving this by the year 2019 on a quarterly basis, if I can ask you that?
Sure. So in terms of, as you rightly said, 30 million is already achieved and we are operating at that level now. So over next few quarters, we might not have significant growth coming in from the fiber volume per se. The fiber expansion which we have embarked on up to 50 million by June 19 will happen in phases. Something might come in next 9 to 12 months that we need to still formalize. But it will come in phases. It won't be a quarterly kind of an increase. We'll see what better we can do through operational efficiency improvement program in the existing setup. As far as the growth is concerned, I think the major growth will come from better efficiency utilization and better operating margin, as well as our cable business, which is also seeing a huge upside. We still have good headroom in that capacity. We are operating at about 65% kind of utilization. So that way that business is showing a good potential. We already have a good order book delivering growth in next few quarters.
Right. Also, sir, if you can tell us that going ahead into the second half, what does the margin trajectory look like? I mean, will you be maintained around the current levels of 17-18 odd %, or is there some more scope for enhancement that you see going ahead into the second half, and also for the next year as well?
Sure, Pranay. So we have been having EBITDA margins at the company level in the range of about 20-21% for a long period of time of almost like 4 to 5 years in this business. And we believe that we would continue with this kind of EBITDA margin profile over next few years. Very clearly we can see that, driven by the strong product portfolio we have, the focus we have on the R&D, improving our product profile continuously, new product development, customer specific products. So all that put together, plus cost consciousness and cost control measures, better operating leverage, all these factors will continue to maintain our EBITDA margin. So it's a very strong focus. Absolute EBITDA needs to continue to increase, and we need to have better margins. So in summary, your answer is that it will be maintained. We'll definitely have that kind of margin profile at about 20-21% for next few years, very clearly.
I'm sorry, I meant 21-22%. I mistakenly said around 17-18%. Also, sir, you have this capacity expansion plan as we spoke about earlier. What's the kind of cash on books of the company right now? What is the quarterly rate of cash accruals that we are seeing? So my question is from the standpoint of the funding of this expansion. Will it be debt based? Will you be undertaking more debt opportunistically so that your debt equity ratio target remains at parity levels, or will this be funded mostly via internal accruals?
So you're right. This capex program which we have involves 1,200 crore kind of capex outlay, and part of it is starting to happen from Q3 onwards. And our program is that we will be funding it largely from the internal cash accruals. You can see last few quarters we have been generating a huge cash internal accruals, and that will help us fund this project through without raising debt substantially. At the same time, I wouldn't rule out any further debt raising on an opportunity basis for a short term as a bridge financing, because we might need some capex ahead of time. So those kind of things we will continue to do. But as I said, that overall net debt to equity we would continue to maintain at below 1 level. I think that will be the key summary out of it.
Right, Mr. Jindal, we're going to leave it at that. Thank you so much for sparing the time for being with us, taking us through how your quarter has been, and giving us a broader sense of how your capacity expansion is likely to pan out, how the funding of that is likely to go through, what you feel about the Bharat 2 project as well, Bharat through the phase 2 expansion of the Bharatnet project, pardon me, and how much of order accretion do you see by way of that, and the longer term prospects for earnings as well. But on the auspicious day of